friends, or this Wednesday is going to be extremely crucial for the crypto market. There are definitely two scenarios that could occur. We definitely need to keep an eye on this Wednesday. It will probably be very, very volatile again. Because on the 1st of April, that is on Tuesday, the refinancing of the debts takes place. And it's quite good that it takes place on the 1st April, because on the 2nd of April, that is on Wednesday, these tariffs in the USA will finally come into effect. So these tariffs that Trump has been suspending all this time against Canada, Mexico, China, Europe, and so on, they start this Wednesday. And the tariffs are currently really causing fear and have indeed created uncertainty in the markets. This is currently the biggest risk. One doesn't know what is really happening here. This Trump administration is inexplicable. It is somewhat unpredictable. Accordingly, many people are on the sidelines, preferring to wait and observe the whole situation. However, there are now two scenarios. On the one hand, we have seen that we have received high global liquidity again, and the correlation between Bitcoin and global liquidity is enormous. This means we could either start rising sharply again from Wednesday if the tariffs are weaker than expected, then we will rise sharply again on Wednesday. If they turn out to be stronger than expected, then we will probably rise only in May, because according to global liquidity, we have to rise one way or another. We have fresh money here again and should rise one way or another. But of course, a lot also depends on Donald Trump. What is decided now regarding the tariffs will naturally have a big impact here. However, it has been leaked through Bloomberg that Trump probably wants to impose milder tariffs. And that would support the first scenario that we can probably start rising reasonably again from next week. Because, as mentioned, weaker tariffs, better market sentiment, global liquidity, many things are coming together, and then everything looks more positive again. So this Wednesday is extremely crucial, whether the tariffs will take place as planned, whether they will be worse, or whether they will be more moderate. I also tend to think that they will be more moderate because there was a deliberate intention to make refinancing cheaper. And that's why it's very good that the refinancing is a day earlier, because then they can announce the next day that the tariffs are not as bad. And then everything fits together again. What is also striking is that here in green, we see the bull run of 2017 and the tariffs. And back then, Trump also imposed tariffs. The tariffs started around mid-March and ended at the end of March. So almost at the identical time. For us, it's just shifted by a few weeks, but we also started rising here from mid-March. As I said, in terms of time and data, it fits perfectly together. It just looks like what is happening now is exactly the same as in 2017 when Trump was already president. Because what I also think here, due to this refinancing from the 1st of April, we will also see quantitative easing. Because on the one hand, they need fresh money from the 1st of April, fresh money to pay off debts. That's why they will print money on their own. And secondly, the Fed will not announce this publicly. It will start in the background step by step to print more money, to pump more money into the markets. If they announced it overnight, we would see a significant rise immediately, and so on. That's why everything is kept a bit under the table. But in the background, they will probably start printing money from the 1st April. So from Tuesday, they will begin printing money, because in April alone, government bonds are maturing, worth $70 billion. They need to refinance them, but they also need to settle the debts, and accordingly, they will start printing money. They will create new money here so that they can also pay off their debts. The macro situation in the USA is also looking better and better. You've noticed inflation is decreasing. Accordingly, the chance is increasing that we will see further interest rate cuts this year. Extremely important. This is what we want and what we also need. Very, very nice things. We see the US dollar is getting weaker. And at some point, it enters this risky area, this risk-on area, where people are significantly more risk-tolerant when it comes to investing because the dollar is simply too weak. The weaker the dollar, the more capital for risk assets. In the last 12 months, we've seen a 64% increase in stablecoins. We now have $214 billion in stablecoins just waiting on the sidelines. And in part, they will be directly invested when the political situation changes here. So we really have an extreme amount of money on the sidelines that just wants to be invested, but at the moment, that's not possible yet. Or rather, wait a little longer until a few things change here. And what was also very important, these last surges in Bitcoin were caused because we had spot purchases here. So this was not leveraged trading. It was not because we liquidated zones or collected money. These were real spot purchases. This is also extremely good and extremely important. This means that really big players have been buying. And I always show you this as well. When you look at who is selling now or who is buying now, we see that the small retail investors are selling, while the big whales continue to increase their Bitcoin holdings. because they obviously know more. They obviously know how the markets work, and they know in the long term we are still very undervalued with altcoins, but of course also with Bitcoin. And honestly, I partly understand why we are now so deeply involved. There are really things here that simply indicate a recession or that really don't look so good. I mean, look at what was promised to us here. The mega rally was promised to us. The crypto state reserve, Bitcoin state reserve, billions are supposed to flow in here, and so on. None of this has happened so far. Accordingly, a lot of air has already been taken out of the markets because we have promises from Trump that simply have not materialized so far. On the other hand, we also just see that the real economy doesn't look so good right now. I mean, the S&P 500 is down nearly 11% in correction. Doesn't sound like much, but for such a heavy asset, it is quite a lot. We know very well that when the S&P 500 corrects by 10%, Bitcoin often corrects by 20-30%. That's how it was in the past, and it will always be like that. Here, the S&P 500 represents the real economy, simply takes the lead. That's why I always find it a bit silly to only look at the Bitcoin chart, because in the end, you should also look at the S&P 500 or the real economy first. Because without them, nothing works here anyway. The 4-year cycle doesn't help us either if the real economy is completely crashing. And there really are such scenarios that if we don't hold or break through certain zones, it might have been our Bitcoin top. Or if we slip into a recession, was that it for now? These scenarios definitely exist, but at the moment, we are actually still in a pretty good position. In my view, we are still in a bullish uptrend as long as we don't break through certain zones, like for example, we shouldn't fall below $73,000. As long as that doesn't happen, we are in a good position here. We have tested the yellow support zone here several times now, but it has always held up quite reasonably so far. It becomes dangerous if we should break below here, so if we fall below 73,000, it could become dangerous. Otherwise, I still have my plan that we will perform a bit better in the coming weeks, then head towards a correction around the end of May, June, July, with a bit of sideways flagging. And then it will escalate nicely again at the end of the year. That's my forecast, how I see the whole situation. Because, I mean, zoom out a bit, look, how was it in the past? How do we stand in terms of time and data? Because in terms of time and data, we are still in a very good position and would have another 6 months that should actually go quite well. I can tell you that just based on the past. I mean, look at the previous cycles. Time and data could be perfectly aligned. Why not this time? If we do the same thing again this time, we would see our bull market peak at the end of this year. That means we have another very nice, good 6 months ahead of us. Just take a look at the big players. The Bitcoin ETFs now hold nearly 5% of the Bitcoin supply. They have become really big investors here. And sure, we have seen some sell-offs in the past weeks, but in proportion, the sell-offs were not. Who knows how wild? These Bitcoins are still being held here. Michael Saylor also holds over 500,000 Bitcoin. These are the big players who are not selling at the moment. They are holding because they are expecting better times. And these are also the players who are steering the game here, who know a bit more than we do. That's why one should perhaps look at them and consider everything based on time and data. And we are still in a pretty good position. I simply think the most important thing is that we first eliminate this uncertainty in the real economy. And once we have done that, we can also expect better prices for Bitcoin. At this point, I hope you enjoyed it so far. And thank you for watching, and see you next time.